Good day everyone, and welcome to our webinar for November. We begin in America as usual. We had very strong results come out from Amazon. The share price rose 9.6% on last Friday, and that of course lifted the S&P 500. Amazon's revenue was up 20%, and they say that this is because of a rising demand for AI and core infrastructure. The company also announced, however, that it had made 14,000 job cuts because of positions which were made redundant by AI within the company. Other tech shares also rose in sympathy. Tesla was up 3.7% on Friday, and Netflix was up 2.7%. Investors, of course, are still absorbing Jerome Powell's remarks about the rate cut in December. Of course, the Monetary Policy Committee did cut rates by 25 basis points as expected, but the important issue was Powell's remarks about the possibility of there not being a rate cut in December, which I think took the wind out of the sails of some of the investors. Nvidia then produced very good results as well, saying that AI has turned the corner, whatever that means, and it became the first share on Wall Street to have a market capitalization of over $5 trillion. So that's quite an achievement. Apple's market cap also increased quite substantially to over $4 trillion. So in our view, the S&P 500 is now in quite a similar position to where it was in 1998. You may recall, if you were around at that time, that in 1998 there was a lot of investor excitement about the internet and what impact it would have. Nobody quite knew how it would affect the profits and productivity of companies. The possibilities seemed endless, and this caused a listings boom. Eventually the level of investment became too much and a bubble developed. In July 1998, that bubble burst, and we had what has become known as the dot-com crash. Right now, in our view, there is a similar excitement about AI and its prospects. As investment in AI increases, there is a danger of it becoming too much too soon, and a bubble may be forming that will burst sooner or later. I have become concerned about the fact that there are some circular transactions now taking place. For example, Nvidia recently lent $100 million to OpenAI to buy Nvidia chips. There's also a similar deal where OpenAI used the profits made in AMD's shares in order to buy more AMD chips, so pushing the AMD share price up. In our view, this kind of round tripping is not a good sign. But perhaps the most important point is that the internet survived the dot-com crash, and today the internet has increased corporate profits right around the world. It is stronger and better than it ever was in 1998. So AI as a technology will certainly survive any bubble which may be forming. It's just that right now there appears to be some serious overinvestment in that sector. Some sort of correction is becoming more and more likely and may have actually even started already. But be aware that the circular, self-fulfilling transactions are not sustainable. Okay, so if you look at the chart on the screen in front of you, you will see what I'm talking about. If we look at the last 6 months of the S&P 500, you can see that it has been characterized by a steady upward trend, new record highs regularly, but also by little mini corrections. You see this first one here that took place in May. It was about 3%, I think. This one over here was about 2.4%. There was another one here, also a couple of percent. Each time that we have one of these mini corrections, there's quite a lot of buying at the bottom. There's a lot of investors, more and more investors, who get excited about buying the dip. So when the market comes off, They buy frantically so that they can get in at the bottom and make some quick profits on the next upward cycle, possibly selling out at a new record high. And you can see here that over the last week or so, Wall Street has lost momentum and is now falling. So we're in another sort of mini correction, you could say. At this stage, it looks like a mini correction. But you need to bear in mind what I've said about this bubble. At some point, I think the bubble will probably burst and there will be quite a big sell-off. That, however, will not signal the end of the bull trend. In our view, this bull trend has got quite a lot of legs and will continue for quite a long time. All right, well, now we, of course, are on day 35 of the US government shutdown. It's equal to the previous record of 35 days, which was also achieved by Trump in his first term of office. Mostly, shutdowns do not have a major impact on the stock market. Over the last 50 years, there have been 19 shutdowns, and the average period that they lasted was for 8 days. So this one is much longer than that. Conventional wisdom is that if the shutdown lasts more than 2 weeks, it can result in some damage to the economy. As we have seen, the shutdown did not stop the MPC, the Monetary Policy Committee, from cutting rates, but it is a concern. The Affordable Care Act has not been renewed and extended. 22 million Americans depend on that subsidy to reduce their costs. They will now have to pay an average of about 114% more for their health care. 57% of these people live in Republican states. For example, a 60-year-old couple making $85,000 a year will have to pay $22,000 more for medical aid in 2026 if the Affordable Care Act is not reinstated. That will impact on Republicans badly in the midterm elections, and in fact, in the recent sort of round of elections that we've had in Virginia, New York, and so forth, and in California, we have seen that the Republicans have lost quite a bit of ground. And that is obviously got to be a major concern for Trump and the Republican Party. Trump's knee-jerk reaction to China's decision to control its rare earth exports was typical. I mean, he just slapped on a 100% tariff, and that caused the S&P 500 to drop 2.7% in a single day. Predictably, though, he has since retracted his absurd 100% tariff, and investors generally are becoming a bit blasé about his tariffs. So you can see that this is the situation that pertains now. The market is in a strong bull trend. There's a lot of excitement about the impact of AI on the productivity and therefore the profits of S&P 500 companies. And the companies themselves are generally producing good profits. The latest bunch of quarterlies were pretty good. So the Magnificent Seven, we're all looking at better profits and above predictions. In a market like this, where we are at a very high point, but the market might go higher, you obviously don't want to sell your shares. So your best defense is to maintain a strict stop-loss strategy. That is our advice to you. Look at your stop-loss strategy and make sure that you've got it in place, because if the market starts to fall, you want to be able to cut your losses and get out. All right, having said that, let's turn our attention to Europe. Ukraine, of course, is much more in the headlines these days. President Zelensky's meeting with Trump was supposedly a big success. The Ukrainian leader flattered Trump and stroked his indomitable ego in order to get what he wanted. Trump is now saying that Ukraine could win this war with US help. Patriot and Tomahawk missiles could be given to Ukraine to extend their attacks inside Russia. Trump appears to have become disillusioned with Putin, and he now describes him as a paper tiger. But everyone knows how fickle Trump can be, and Zelensky might have been able to pull off a major coup here, but at least he's not in the dog box, so to speak. Ukraine, of course, is continuing to destroy Russia's oil infrastructure. As much as 38% may have been eliminated, some of it permanently. The war on the front line is becoming a dangerous game of cat and mouse. Drones and counter-drones make it vital to keep the exact position of troops hidden. The moment their position is known, they are destroyed with precision artillery or first-person view drone strikes. Land drones are now being used to resupply the frontline troops and to bring out the wounded. So there's a constant battle of innovation, and new tech, some of it using AI, is enabling drones now to make their own battlefield decisions. Swarms of drones are being used in tactical waves to disable air defenses and then engage specific high-value targets. The increasing range and payloads of these drones is making expensive missiles irrelevant. Russia's widely dispersed oil infrastructure is a sitting duck with no effective defense. Cash from oil is needed by Russia to fund their ongoing war, and the frontline troops are not getting enough fuel for their vehicles. In our view, this war cannot last for much longer. Some sort of conclusion appears inevitable, and we believe the odds are in favor of Ukraine because it has the backing of Europe. Many individual European economies dwarf the Russian economy in gross domestic product. And in the end, all wars come down to economics. Who can last the longest? All right, let's turn our attention now to the South African economy. The Consumer Price Index was up 3.4% in the year to the end of September. That's an increase on August's 3.3%. Core inflation, which of course excludes food and fuel, was slightly up at 3.2%. Economists are expecting the CPI to go as high as 3.8%. And of course, inflation is now above the Reserve Bank's new target of 3%. Housing and utilities were up 4.5%, and food and beverages were also up 4.5%. Meat rose by 11.7% because of the outbreak of foot and mouth disease. Dairy, oils, and processed foods were a bit cheaper. Fuel prices, of course, came to the rescue, falling 2.2% over the year and by 3.3% in the month. The Reserve Bank says that the new US tariffs will cut South Africa's gross domestic product growth by as much as 0.4%. They will also result in the destruction of 40,000 jobs. About 60% of South African export products are affected by these tariffs. South Africa's membership of the African Growth and Opportunity Act, of course, has ended, and agricultural products are tariffed. Copper and aluminium also have tariffs of 50%, but coal and platinum group metals are excluded. The motor manufacturing industry is probably going to be the worst affected. Anyway, the Reserve Bank now expects growth in 2025 to be 1.2%, and the IMF has increased its prediction to 1.1% for the year. Moody's predicts a growth of 1.6% in 2025, probably the most optimistic prediction. Reforms in electricity production and port facilities, as well as rail logistics, have improved the outlook. The involvement of the private sector with their skills and their capital has really helped logistics. But we are still way below the average growth of sub-Saharan Africa, which is 5%, and the Government of National Unity's goal of 3%. But it looks like it's a bit better than the 1% per annum growth that we've had on average over the last decade. Retail sales were up 2.3% in the year to the end of August. Hardware, paint and glass were up by 8.1%, showing that people are getting into home improvements. And obviously people are finding that they've got more disposable income because of the low inflation and of course because of falling interest rates, which puts extra cash into every bondholder's pocket. Bankserv's Betty Index, which is the electronic transactions index, increased for the 5th month in a row in September, and it's now 3% above where it was a year ago. But on the negative side, ShopRite's Food Security Index shows that South Africa has the worst situation that it's had for 10 years. About 1 in 5 children under the age of 5 years old has growth problems due to a lack of food in this country. Malnutrition and deaths from malnutrition are rising. This is partly due to the shift in the real rates of interest in the economy. South Africans are being forced to become a nation of savers, not spenders, by high interest rates. The transition, of course, is painful, but we will have significant benefits in the longer term. Private sector credit extension was up 6% in the year to September, but most of that was companies which had their credit extension increased by more than 8.6%, while households only increased their credit by 2.9%, which basically shows that they are paying off debt. Businesses are more optimistic, households are still conservative and repaying debt. Vehicle sales in September were at their highest level in 10 years, up 24.3% from September last year and 15.6% year to date. Vehicle exports were also up a massive 32.9% above September last year. Car sales increased 38%, and the demand for finance was strong. This shows the rising level of real incomes in South Africa due to low inflation. The Reserve Bank says South African companies are sitting on about $1.8 trillion in cash, which they are not spending. In other words, they're not investing that cash into their business, they're holding it. And they're holding it because they're still scared that there may be some events which will require them to have lots of cash. And of course, that 1.8 trillion is a far cry from where we were before COVID. In 2019, there was only 700 million being held by businesses in cash. The high cost of electricity and bottlenecks with transport have been a problem for business and stopped it from reinvesting in this country. Growth rates really need to improve before capital is invested. And we are facing stiff competition from cheap imports, which is a major problem now in this country, especially in the motor vehicle industry. The failure of municipalities to provide services is another problem. They have been a consistent difficulty for this economy in this country. Of course, agriculture has been very good. It only contributes about 3% of gross domestic product, but it is a very important thing for South Africa because millions of poor families depend on growing a few acres of maize to survive each year. In a bad year, they of course are forced to live off charity or government subsidies. But the latest estimates show that the summer grains and oilseed crop will be above last year. It was about 20 million tons last year, and that was 28% better than the year before. So we're getting high yields and low food inflation as a result. Agricultural exports are up 10%, resulting in an inflow of foreign exchange. Overseas investors sold about 165 billion rands worth of South African shares in the first 8 months of 2025. This compares with sales of 93 billion by the same time last year. The sell-off is a result of persistent low levels of growth, and of course Trump's tariffs haven't helped. Despite this, the JSE overall index is following Wall Street up to new record highs. And the rand is getting steadily stronger. Tax collections for the first 6 months of 2025 are 2% above the budget. 6 billion of that is due to withdrawals because of the new two-pot retirement system. The rest is due to better take-home pay and improvements at SARS. The extra cash, of course, will make it easier for the Minister of Finance to produce a good midterm budget policy statement on the 12th of November, which is what he's got to do. Okay, Standard Bank produced a report on the informal sector, which shows that about 80% of businesses are not registered, and they operate mainly in cash. The new licensing bill of 2025 means that municipalities will be able to force them to register. But the municipalities, of course, are notoriously inefficient and corrupt. We believe that this law will just create another corrupt bureaucracy. The informal sector is primarily a euphemism for tax evasion. Informal businesses like minibus taxis completely ignore all the laws in this country. In fact, they are the sort of ultimate laissez-faire capitalism. And they have been responsible, informal businesses have been responsible for employing a lot of people in this country and keeping them from starvation. In fact, in this country, it's estimated that there are about 3 million informal businesses. In our view, the way to counter this is to wait until a business gets big enough to have to open a bank account. I mean, there's a limit to how far you can go with cash as your business grows. Sooner or later, you will have to open a bank account. As soon as you do that, of course, SARS can have access to that bank account and can bring you into the formal sector so that you're paying tax. But while you are still a cash business, I don't see any point in pursuing these small informal businesses and forcing them to register. That's just another level of bureaucracy and corruption. That's what we see. Okay, online gambling. Big thing in South Africa now. And sports betting. It's become very big business in this country. The National Gambling Board now estimates that online gambling accounts for about 60% of all gaming in South Africa. Gambling, of course, is an unproductive activity. It simply redistributes wealth from one person to another. It does not build anything or manufacture anything. It does not increase the wealth of the country. Many poor people are now using their government pensions to gamble with. Last year alone, online betting increased by 45%. So many of these online gambling sites are located outside South Africa, and they are illegal. So this is a place where South Africa really needs to clamp down, I believe. I mean, casinos and retail outlets like ShopRite, Checkers are complaining that their turnover is being affected by money that's being spent on gambling. Right, Eskom is warning that its cash flow is being hit by unpaid municipal debts. Well, that's nothing new, really. It's just that the size of the debt is getting bigger. Added to this, of course, the National Energy Regulator of South Africa has not given Eskom the price increases that it wanted. And Eskom says the result is that it's running a 250 million a year deficit, and that it believes that its debt will reach 330 billion by the year 2030. Many consumers and businesses, of course, are moving away from Eskom, making its future profitability very difficult. It was recently reported that Eskom lost 20 billion rand to an illegal electricity token scam. And that scam was basically run by Eskom employees, so they lost 20 billion rand there. In our view, Eskom is a dying organization. It's just a matter of time. Another utility that's looking really bad is water. For example, in Johannesburg, there's a water maintenance backlog for infrastructure maintenance of 27 billion rand. This means that the water supply is becoming less and less reliable. Water outages are particularly serious for some businesses. In fact, recently the DA's Helen Ziller brought in some water experts to assess the situation. The ANC, of course, has done nothing so far. But the mayor of Johannesburg, Dada Morero, says that he is raising 100 million rand to fix the problems. Well, I'll believe that when I see it. The ANC's policy of black economic empowerment remains one of the most corrupt and wasteful impediments to growth in this country. BEE has caused systematic looting of state funds in almost every area of the economy. The new Public Procurement Act was signed into law by President Ramaphosa in the middle of 2024, last year, and it has not begun to operate because the regulations have not been promulgated yet. That seems to us to be very slack indeed. I mean, it's more than a year ago that he signed this thing into law. The DA has put forward a very simple, straightforward alternative, and that alternative makes no mention of race whatsoever. Tenders will be allocated mostly on price and value for money, but other factors include job creation, environment, skills, training, and so forth. The DA's suggestion cuts the red tape, but of course it's opposed by the ANC because it does not include BEE. We can see this becoming a significant problem, and speaking from personal experience, I can tell you that BEE has caused a lot of difficulties in the economy in this country. All right, let's look at another chart. Let's go to the Rand now. Sorry, just let me get that chart on the screen. Just taking a look here. Right, there's the Rand. Put a bit more data on the screen. You can see what we're dealing with. There you can see the resistance level. The Rand, of course, reached its weakest level on the 9th of April this year. Cyclical low of 1993 to the US dollar. And then Trump started backing off on all his tariffs. So the Rand strengthened as a result, and then it found some resistance at 17 Rand 50 to the US dollar, and then it broke down through that resistance in September, and then that resistance line has now become a support line. So as you can see, the Rand strengthened all the way down to around 17.10 to the US dollar, but then weakened back to the 17.50 level, and it's just done the same thing. Strengthened to 17.10 or thereabouts, and then now weakened back towards 17.50. We believe that this bottom around 17.10 will be broken in due course, and the Rand will continue to strengthen. That's our long-term projection. Of course, a stronger Rand means lower inflation here at home and better petrol prices and so on. Of course, we've also seen that the S&P 500 is making new record highs, which means that internationally there is a lot of bullish sentiment, and that is what we call a risk-on scenario. So investors internationally are excited about taking on risk and making better returns, so they bring their money into South Africa, and that strengthens the Rand. But of course they are very fickle. They can take their money out again just as quickly. All right, let's now look at gold. Gold is also very interesting at the moment. I'm going to start by looking at it in dollars, US dollars. The interesting thing about the gold price, just put a bit more data on the screen here. You can see here, going back a little bit in history, we pointed out this resistance at $3,424 per ounce. It made 4 touch points here on this resistance line, and if you go back even further, you can see that that's quite similar to the resistance that we had previously at $2,060 an ounce, and we reported that resistance was broken in March 2024. We reported that in the confidential report. Now we're at the same position. We've had an upside break through that 3,424, and the gold price has rocketed up and went strongly above $4,000 an ounce on the 8th of October this year, and that's about 70,000 Rand per ounce of gold. Part of the reason for this is, of course, that the US dollar has been falling against a trade-weighted basket of hard currencies. So that's part of the reason. But another part of the reason, of course, is that there's been an increase in uncertainty worldwide. Investors are responding to that by investing in gold, which is a safe haven asset, and reserve banks are buying up gold hand over fist all over the world. So that's interesting, isn't it? Of course, this sharp rise in the price of gold has been a bonanza for South African gold mines. Their revenue is up on average about 22% this year. Together they just produce close to 100 tons of gold per annum. And gold is being, as I said, accumulated by central banks around the world. Gold shares are moving up very strongly, and we believe this has been an opportunity for private investors. We've had quite a few of them on the winning shares list. For example, Pan-African, since we added to the winning shares list, is up 340%. Goldfields is up 208%, and Harmony is up 193%. So gold is looking good. And then, of course, we need to look at the oil price. So oil is still in a downward trend. So this is very important chart. This one, you see here the downward trend from that cycle high there on the 12th of June. That downward trend has accelerated. Gold has come down and touched this support level at about $60 an ounce, but it's remaining in that downward trend. And this, of course, is very important because it means that our fuel prices here in South Africa can continue to fall. It's obviously also very bad news for Russia, whose production of oil has declined now with all these Ukrainian strikes on its oil facilities. And for the little that they are able to export, they're for now getting far less money for it. So that's got to have a long-term impact on Russia. But for us, it's very good news because lower petrol prices mean that everybody's got more money in their pockets at the end of the day. We believe that sooner or later, of course, the oil-producing countries, OPEC and Russia, will be sitting on a lake of oil that nobody really wants. The world is moving steadily towards renewable energy, and we think that that is one of the reasons why the oil price is falling. Right. Obviously, also, a falling oil price stimulates economic growth throughout the world. All right, let's look at some companies now. A couple of new listings. Optasia listed on the 4th of November, just the other day, offers AI-enabled platform for microlending and airtime. It has 49 distribution partners and about 860 million subscribers, mostly in emerging markets. In its results for the 6 months to the 30th of June, it reported revenue of $117 million and EBITDA, that's earnings before interest, taxation, depreciation, and amortization, of $53.8 million. In the initial public offer, it sold 342.2 million shares for 19 Rand each, and the listing was quite heavily oversubscribed. It will have a free float of about 30%. And what is also interesting is that FirstRand bought a 20% stake in the company. So that's obviously gives it a level of credibility. Coca-Cola HBC will be heading for a secondary listing on the JSE at the end of 2026. It already has a listing overseas, and its short code is CCH. It is a bottler of Coke products in 43 countries, and it plans to buy about 75% of Coca-Cola Beverages Africa. That deal will be worth about $3.4 billion. The listing, of course, will show a commitment to South Africa and to Africa generally. We believe that that will be a huge institutional stock and a rand hedge, of course. So the current sell-off may be a buying opportunity. Okay, let's look at Boxer. Boxer, of course, was spun out of Pick n Pay. It's a retailer, a grocery retailer that aims at the low end of the market. So it competes with ShopRite and others. In its results for the 26 weeks to the 31st of August this year, turnover was up 14% and trading profit was up 15%. It launched its own loyalty program and it has increased its alternative revenues by about 18.4%. Capital investment was 539 million, so that's up 73%, 74% really. Most of that was spent on new store openings, so it's opening new stores everywhere at the moment. The company is growing in a very competitive market, so that's also a good thing. You can see it's broken up through resistance at the level of about 73 to 75 rand a share, and it's now moving up. Should continue to perform well in our view. Okay, let's look at Anglo American. Anglo, of course, is a massive international mining house now, mostly out of South Africa, but it's been doing very well with its manganese assets, and production is up very strongly. Kumba's iron ore production has also benefited from improved local logistics, ports and rail. Anglo has sold its remaining shares in Valterra, which used to be, I think it was Impala Platinum, for about $2.5 billion in cash, so that's quite good. We added Anglo to the winning shares list on the 10th of September. It's gone up about 11.5%. Look, it's involved in a sell-off right now, so maybe it's looking like a good buy at these levels. Okay, Fortress. Fortress, of course, is a real estate investment trust specializing in properties which are used for logistics, office space, and computer retail. It holds also about 15.2% of Nepi Rockcastle, which you'll know. Business Day reported that Fortress is moving strongly into renewable energy. It has now installed 401 inverters and 99,000 solar panels, and it generated about 100 gigawatt hours of electricity. The share has moved up steadily since we added it to the winning shares list on the 19th of June last year. It was then 1664, and it's now at 23.30 or thereabouts. And we believe it will go further. Stefanuti. Steph stock. Don't know why I'm not getting that. Let's try again. Steph. Oh. Sorry folks, I'm battling here a little bit. It's coming. There we are. Okay, so here's Stefanuti. Let's put a bit more data on the screen for you. You can see that we added it to the winning shares list on the 22nd of June last year. It was then trading for 146 cents. It had this big dispute with Eskom over Kusile, over the work that it did at the Kusile power plant. That dispute has now been settled, and Stefanuti is getting a nice payout from that of 685 million rand. So that will help him a lot. You can see the share price is now, as of last night, is 5 rand. So it's gone from 146 cents to 505 cents. And it's done that in just over a year. So it's going up at a hell of a speed. We think that it's going to continue performing well. So we also noticed that it has recently obtained a facility from Standard Bank for 850 million rand. So it's cash rich. And it looks like it's quite a good option here, much less risky than it was. Okay, Spear. Spear is a company which it's also a real estate investment trust. It focuses on properties in the Western Cape, which is probably the fastest growing area in South Africa. In its results for the 6 months to the 31st of August this year, it showed distributable income up 55.7%. Headline earnings per share were up about 12%. But the most impressive thing about this company is its loan to value. Its loan to value, in other words, its gearing, is just 13.85%, which means it's got almost no debt. And that puts it in a very strong position to take advantage of any opportunities which come up in the marketplace. We added it to the winning shares list a while back on the 26th of June. Let me just put a bit more data in here. Okay, so at that time it was 88 cents. Sorry, that doesn't look right. In June last year, sorry, it was at about, let's be conservative, it was about 880 cents. But it has been moving up steadily, and it's now trading for about 1140 cents, so it's a nice gain. It's one of the most exciting shares on the JSE, but of course, being a property share, it's not going to be one that gives you a rapid return. Rather, it's very secure and very steady. So we expect it to continue to perform well in the future. Okay, the last share I want to talk about today is IOCA. IOCA, as you may recall, used to be called EOH. And they've just produced their results for the year to the 31st of July 2025. Here you can see the share on the screen, IOCA. Let's put a bit more data on, even more. Okay, we added it to the winning shares list back here on the 6th of November last year at 220 cents. It closed last night at 419 cents. And you can see the strong upward trend. This is really a turnaround situation where the company made this double bottom. You see here with a bottom in February and then a bottom again in April last year, and then started moving up. We added it to the list over here, and you can see it's done very well since then. Again, we expect this share to continue to perform well in the future. Okay, folks, that's about what I've got for you today. I hope that you found something in this that you can use. Otherwise, if you want to talk to me either on the phone or on WhatsApp, my number is 071 5022 383. I'll repeat that, 071 5022 383. Thank you for listening to me.